Hello traders, this is the Zigzag Man, and today's lesson is titled Beware of the Gap and Trap. A gap up at the open, like right here, it closed on this day at 397. This is fast. This is the 3 times bull ETF for the financial sector. And this happens when the futures are way up in the morning. Okay, so he opened at 428. The close was 397, so that's a 31-cent gap up at the open. And the worst thing you can do when the futures are up is to go ahead and buy it in pre-market, because a gap and trap means that he opens higher and he will go down almost immediately to where he closed the previous day. So if you buy in pre-market, the first thing you want to do is sell immediately at the open right here, because here it is, it gaps up and it traps down. Now this was an especially weak day for the market, but if you had bought at the open thinking it was going to be a really good day because the futures were up so much, that's not the way to play this. You have to watch and see what happens. Basically, there is a trade in here, and it's actually going short at the open, knowing or thinking that the gap will fill. So if you bought 1,000 shares at the open, somewhere between, let's go with the 5-minute chart here, somewhere between 420 and 433. Let's say you went short at 420. Within the first hour and a half, almost 2 hours, with 1,000 shares, you'd be up $600 at the low of 361. Okay. 420 to 361 or so. It's about 60 cents. You would have made $600 right here. Okay, the same thing happened the next day. He closed at 381 and opened the next day at 417. And immediately he was well above the upper Bollinger Band on the 5-minute chart and also on the 15-minute chart. And when he's so far outside on the 15-minute chart, you can almost be guaranteed he's going to fall. So he gapped up and he trapped down. That would have been a good short position to take right here. But generally, if you're a novice trader, a novice day trader, I don't recommend trading in the first half hour of the day anyway, because it's called amateur hour, and the extreme volatility found in the first half hour and the last half hour of a trading session are times to avoid, generally speaking, unless you're experienced and you're very nimble and very quick. Now, there were some pretty good plays here on the 5-minute chart according to my strategy. Right here we got a CCI buy signal at 1140. He wasn't quite at the lower Bollinger Band, but still you get the buy signal here, and he runs from 360 up to 390 with a couple of 1,000 shares. That's a 30-cent profit or a $600 gain on this move right here. Here's an even better one. He falls like a rock, straight down almost, hits the lower Bollinger Band. Here's the buy signal on the CCI. Here's the breakout of resistance. The breakout of resistance on the stochastics. At the same moment, the CCI gives the buy signal after it did a little double bottom below the -100 line. And this one was worth, the buy signal came at 1:50 p.m. 1:50 p.m. He got a big green candlestick. you would have been in at 370 between the 365 low and the 375 high. And as you can see, the CCI broke right up through the 0 line, and stochastics broke right up through the 50 line, and that would have been a guaranteed good score here. So let's say you were in at 370 at 150, you would have been taking profits here. Okay, 240 in at 150, so that would have taken 50 minutes for him to move from 370 to a high of, let's say, $4. That's 30 cents. That's another $600 here. From 370 to $4, that's 30 cents. A couple of thousand shares would have been 600. 1,000 shares would have been 300. The sell signal came at right here at 250. Okay. Sell signal came right here when he started closing below the 5 MA at 250. When stochastics broke below this level of support, and the CCI gave the initial sell signal, and he was closing below the 5 MA. Okay, so basically you've got to beware first thing in the morning. If the futures are up, don't buy right at the open thinking it's going to be a good day. Wait for the gap and the trap and to see what he does, and then avoid amateur hour, amateur half hour, and wait for the CCI to give buy signals on the 5 minute. There were two really good ones here on this day. So don't get fooled by the gap up in the morning, because you're playing a dangerous game if you think you're going to buy because the futures are up. Wait for them to settle down and start to give you the normal buy signals that happen during the regular trading session. Now I'm going to show you one more, an inverse gap and trap. Okay, here's the 15-minute chart of it, and this was last Friday, which was March the 6th. Okay, this is called, it's also a gap and trap, but in reverse. He closed here on Thursday at 112.71, and he opened up the next session at 110.61. So that was it's a hard one to grab there, so small. That was about a $2 drop at the open. But as you can see on the 15-minute chart, see what you're doing here is you're buying when he's so far below the lower Bollinger Band. Anywhere below the red line here, which is the lower Bollinger Band, would have been a good entry. He was also well below the lower Bollinger Band on the 5-minute chart. Now the CCI buy signal came a bit late here, but if you look at the 1-minute chart, it came right on time. So this is an inverse gap and trap. See, the buy signal came on the 1-minute chart right here at 9:49. So you would have been buying down here at about, I posted another video chart where I bought at 108.30, which would have been right here. Okay, so the 1-minute buy signal came at about 9:45 a.m. and here on the 5-minute chart it came 10 minutes later that would have been almost $2 higher. So what you want to do on the 5-minute chart is buy when he's really far below the lower Bollinger Band, anywhere on this big red candle, but you probably would have tried to get in on the first green candle, thinking that the gap down he gapped down here at the open, but then he went ahead and filled it right in this area right here. So this is an inverse gap and trap. So if you had bought on the 1-minute buy signal here at 1:18:30, it ran all the way to $15. The sell signal didn't come until here on the 5-minute chart at 11:05, when he broke down and started closing below the 5-moving average. Now he closed below the 5-moving average here, but the CCI was still headed up. It had not crossed up above the 100 line and then crossed back down through it. Okay, so at this moment here, stochastics was breaking below the level of support at the 75 line. He got the sell signal, and he was definitely closing below the 5 MA. So if you had been in at 108.30 on this candlestick here, actually it would have been better here. My 108.30 was in this zone here. 108.30, and as soon as he touches the upper Bollinger Band, which would have been about here, that would have been at least 114.30. That's a $6 score. With 100 shares of SDS, that would have been a $600 score in just over an hour. Okay, so the gap down, the trap, and then he fills the gap. So it works both ways. Don't be fooled by the gap up at the open because it'll fill. Don't be fooled by the gap down and sell because you're getting ready to buy when the CCI gives you the buy signals. Okay, I always look for a huge fall like this. Now, because he gapped down right here, I thought he would fill it almost immediately. Okay, I thought he would gap down and then go up and fill it. He didn't quite get there. Okay, but when he falls vertically like this, there's going to be a bounce, and sometimes it'll be a bounce straight up instead of at this angle here. Sometimes when he falls like a rock, he'll go straight back up immediately, and that's what you're hoping for. You're trying to buy below the lower Bollinger Band. Now, sure, you're going to say it's below here, but the CCI hadn't given the buy signal yet. So you wait, you watch that he's falling, the CCI starts to uptick. You're waiting for, and gives the buy signal by crossing up through the minus 100 line. You're also waiting for stochastics to break out of this level of resistance here. And you're looking for volume. High volume is usually formed at a bottom. Here's the biggest volume right here at the bottom. So you're looking for that really high volume well below the lower Bollinger Band and the CCI to be upticking. Now in the case of the 5-minute chart, when he does such a vertical fall like this, straight down, straight up and down vertical, you buy as soon as the CCI starts to uptick again on the 5-minute chart at 9:45, because here's your buy signal here on the 1-minute at 9:46, right in that zone, 9:47. You don't wait for the CCI buy signal here. You're in on the 1-minute buy signal, but the 5-minute will confirm it a few minutes later, 10 minutes later. You know it's good, and then you're waiting for the gap to fill right here at the close. Okay, well, it's almost time for another trading day. Today is Monday, March the 9th. I want to wish you all good luck trading, and I hope by showing you this gap and trap, both up and down, that you got an idea not to play the first 15 minutes of the day. See, it took him 20 minutes, 5, 10, 15, 20 minutes before he started to settle down and do what was fairly normal. See the extreme volatility in the first 15 minutes right here. The market opened at 9:30, and by 9:42 the high volume came in. Okay, and he started his real move for the day. So I want to wish you all good luck on your trades. Happy trading from the Zigzag Man.